Question 1. Risk assessment procedures indicate that Kirin Holdings has identified a significant, previously undisclosed technological breakthrough that is expected to substantially impact its future revenue streams. The head of research and development is eager to share this news with key industry analysts to gauge their reaction and generate positive buzz. What is the most appropriate course of action for Kirin Holdings to manage this situation in compliance with regulatory requirements? Option A. Delay any public or selective disclosure until a comprehensive internal review by the legal and compliance departments has assessed the information's materiality and determined the appropriate disclosure strategy. Option B. Issue a brief, preliminary statement acknowledging a potential development without providing specific details while internal reviews are ongoing. Option C. Immediately disclose the information to key industry analysts to generate positive buzz and prepare for a formal announcement. Option D. Authorize the head of research and development to share the information with a select group of trusted industry analysts under strict non-disclosure agreements. Correct answer is C. Immediately disclose the information to key industry analysts to generate positive buzz and prepare for a formal announcement. Explanation. This scenario presents a professional challenge because Kirin Holdings, as a publicly listed entity, is subject to stringent regulatory oversight regarding its financial reporting and disclosure obligations. Core of the challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or insider trading. The regulatory framework for listed companies, such as that overseen by the Financial Conduct Authority, FCA, in the UK and guided by the UK Corporate Governance Code, mandates that Kirin Holdings must disclose price-sensitive information promptly and in a manner that does not mislead the market. The decision-making process requires a nuanced understanding of what constitutes price-sensitive information and the appropriate channels for its disclosure. The correct approach involves a thorough internal assessment of the information's materiality and potential impact on Kirin Holdings' share price, followed by a formal, regulated disclosure process. This ensures compliance with the Market Abuse Regulation, MAR, and listing rules, which require immediate disclosure of inside information unless specific conditions for delaying disclosure are met. The internal review process, involving legal and compliance teams, is crucial for determining materiality and ensuring the disclosure is accurate, complete, and not misleading. An incorrect approach would be to disclose the information informally through a press release without prior consultation with legal and compliance, or to delay disclosure beyond what is permissible under MAR without a valid justification. Disclosing information informally risks it being misinterpreted or incomplete, potentially leading to market confusion and regulatory scrutiny. Delaying disclosure without a legitimate reason, such as ongoing negotiations where premature disclosure would prejudice Kirin Holdings' interests, constitutes a breach of MAR and could be construed as market abuse. Another incorrect approach would be to selectively disclose the information to a limited group of stakeholders before a public announcement, which would constitute insider dealing and a severe breach of regulatory requirements. Professionals at Kirin Holdings should employ a structured decision-making framework. This involves 1. Identifying potential price-sensitive information. 2. Assessing its materiality and impact on the company's share price. 3. Consulting with the relevant internal departments, legal, compliance, investor relations. 4. Determining if disclosure is immediately required or if a delay is permissible under regulatory guidelines. 5. Executing the disclosure through the appropriate regulated channels, ensuring accuracy and completeness. 6. Documenting the entire process for audit and compliance purposes. Question 2. The control framework reveals that Kirin Holdings is in the final stages of negotiating a significant acquisition that, if successful, would materially impact its share price. A small group of senior executives is aware of this negotiation. Which of the following approaches best adheres to regulatory requirements and ethical best practices for Kirin Holdings? Option A. Immediately inform all department heads and key personnel within Kirin Holdings to ensure operational readiness for the acquisition. Option B. Continue to treat the negotiation as strictly confidential, only disclosing it to the board of directors and legal counsel, and prepare for a public announcement once the deal is finalized. Option C. Share the information with a wider circle of trusted employees across different departments to gauge their reactions and potential integration challenges. Option D. Disclose the information to a select group of external advisors and consultants to obtain preliminary feedback on the strategic implications of the acquisition. Correct answer is A. Immediately inform all department heads and key personnel within Kirin Holdings to ensure operational readiness for the acquisition. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for growth and the imperative to adhere to regulatory requirements, particularly concerning insider information. Kirin Holdings, like any publicly listed entity, operates under strict rules designed to ensure market integrity and fair play. The challenge lies in navigating the gray areas of information dissemination and ensuring that no individual or group gains an unfair advantage through privileged knowledge. Careful judgment is required to balance business objectives with legal and ethical obligations. The correct approach involves a rigorous internal process of information classification and controlled disclosure. This means that before any sensitive information is shared, even internally, its potential impact on the market must be assessed. If the information is deemed material and non-public, it must be handled with the utmost confidentiality and disseminated only through approved channels and at the appropriate time, typically following public announcement. This aligns with the principles of market abuse regulations, which prohibit the disclosure of inside information to third parties in the ordinary course of employment, unless such disclosure is made in the normal exercise of that employment, profession, or duties. The regulatory framework mandates that companies establish robust systems and controls to prevent insider dealing and the unlawful disclosure of inside information. An incorrect approach would be to share the information with a select group of senior executives without a clear policy on its dissemination or a plan for public announcement. This creates a significant risk of selective disclosure, which can lead to insider trading if those executives act on the information before it is public. This failure directly contravenes regulations prohibiting the unlawful disclosure of inside information. Another incorrect approach would be to assume that because the information is shared internally, it is not subject to the same strict controls as external disclosures. This overlooks the fact that even internal dissemination can constitute unlawful disclosure if it is not made in the normal exercise of duties and could lead to market abuse. A further incorrect approach would be to delay the public announcement of the information indefinitely while continuing to share it internally. This prolongs the period during which privileged information exists and increases the risk of leaks or misuse. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Information assessment. Clearly identify the nature of the information and its potential materiality. 2. Regulatory review. Consult relevant regulations and internal policies regarding the handling of such information. 3. Control implementation. Establish appropriate controls for information dissemination, including confidentiality agreements and designated disclosure channels. 4. Legal consultation. Seek legal advice when in doubt about the interpretation or application of regulations. 5. Documentation. Maintain thorough records of all decisions and actions taken regarding sensitive information. Question 3. The assessment process reveals that a candidate for a critical role at Kirin Holdings is a close personal friend of the senior manager responsible for overseeing the final interview stage. The senior manager is aware of this personal connection. What is the most appropriate course of action for the senior manager to ensure the integrity of the hiring process at Kirin Holdings? Option A. Subtly steer the interview questions and evaluation towards a positive outcome for the candidate, rationalizing it as a favor to a friend. Option B. Proceed with the interview and assessment as normal, believing their professional judgment can remain objective despite the personal relationship. Option C. Disclose the personal relationship to the Human Resources Department and recuse themselves from all aspects of the candidate's assessment and decision-making process. Option D. Ignore the personal relationship and hope that no one else at Kirin Holdings becomes aware of it during the assessment. The correct answer is C. Disclose the personal relationship to the Human Resources Department and recuse themselves from all aspects of the candidate's assessment and decision-making process. Explanation. This scenario is professionally challenging because it requires an individual at Kirin Holdings to navigate potential conflicts of interest and maintain the integrity of the hiring process. The core of the challenge lies in balancing personal relationships with professional obligations and adhering to Kirin Holdings' internal policies and relevant employment regulations. Careful judgment is required to ensure fairness, transparency, and compliance, preventing any perception of favoritism or impropriety. The correct approach involves a transparent disclosure of the personal relationship to the appropriate authority within Kirin Holdings, such as HR or the hiring manager, and recusal from any part of the decision-making process concerning the candidate. This upholds professional ethics by prioritizing objectivity and fairness. It aligns with general principles of good corporate governance and employment law that mandate a conflict-free hiring process. By disclosing and recusing, the individual demonstrates integrity and commitment to Kirin Holdings' values, preventing any appearance of bias that could undermine the credibility of the hiring decision and potentially lead to legal challenges or damage to the company's reputation. An incorrect approach of proceeding with the assessment and evaluation without disclosure is ethically flawed, as it creates a significant conflict of interest. This failure to disclose can lead to accusations of favoritism, compromising the fairness of the assessment and potentially violating Kirin Holdings' internal code of conduct or employment policies. It also risks legal repercussions if the unsuccessful candidates believe the process was unfair due to the undisclosed relationship. Another incorrect approach of attempting to subtly influence the assessment process in favor of the relative, even without explicit disclosure, is a severe ethical breach. This constitutes a direct violation of professional integrity and could be construed as misconduct, leading to disciplinary action and reputational damage for both the individual and Kirin Holdings. It undermines the meritocratic principles of hiring and can create a toxic work environment. Finally, an incorrect approach of ignoring the situation and hoping it goes unnoticed is professionally irresponsible. This passive stance fails to address the inherent conflict of interest and leaves Kirin Holdings vulnerable to ethical breaches and potential legal challenges. It demonstrates a lack of proactive engagement with professional responsibilities and a disregard for maintaining a fair and transparent hiring environment. The professional decision-making process for similar situations should involve a clear framework. 1. Identify the potential conflict of interest. Recognize any personal relationship that could influence professional judgment. 2. Consult internal policies. Review Kirin Holdings' policies on conflicts of interest, hiring, and employee conduct. 3. Disclose transparently. Inform the relevant parties, e.g., HR supervisor, about the relationship. 4. Recuse appropriately. Step away from any decision-making or evaluative role concerning the candidate. 5. Document the process. Keep a record of the disclosure and recusal. 6. Seek guidance if unsure. If the situation is complex, consult with HR or legal counsel. Question 4. Cost-benefit analysis shows that a proposed expansion into a new market for Kirin Holdings could significantly increase profits. However, preliminary research indicates that the regulatory environment in this market is complex and has a history of lax enforcement, potentially allowing for business practices that, while not explicitly illegal, are ethically questionable and could attract negative public scrutiny. Kirin Holdings is committed to operating with integrity and adhering to the highest ethical standards as outlined in its internal guidelines and the Kirin Holdings Hiring Assessment Tests regulatory framework. What is the most appropriate course of action for Kirin Holdings? Option A. Immediately proceed with the expansion, assuming that any practices not explicitly prohibited by law are acceptable, and focus solely on maximizing profit. Option B. Proceed with the expansion after conducting a detailed legal and ethical risk assessment, seeking expert advice on navigating the local regulatory landscape, and developing robust internal controls to ensure compliance and ethical conduct. Option C. Abandon the expansion opportunity entirely, as the potential for ethical compromise and regulatory ambiguity is too high, regardless of the financial benefits. Option D. Delegate the decision-making to the local management team in the new market, trusting their judgment on local customs and regulations. The correct answer is B. Proceed with the expansion after conducting a detailed legal and ethical risk assessment, seeking expert advice on navigating the local regulatory landscape, and developing robust internal controls to ensure compliance and ethical conduct. Explanation. This scenario presents a professional challenge for Kirin Holdings due to the inherent conflict between pursuing a potentially lucrative but ethically ambiguous business opportunity and upholding its commitment to responsible corporate conduct. The challenge lies in navigating the gray areas of regulatory compliance and ethical decision-making when faced with a proposal that, while offering financial benefits, carries significant reputational and potential legal risks. Careful judgment is required to balance shareholder interests with broader stakeholder responsibilities, and to ensure that any decision aligns with Kirin Holdings' stated values and the regulatory framework governing its operations. The correct approach involves a thorough due diligence process that extends beyond mere financial projections to encompass a comprehensive assessment of the ethical implications and regulatory compliance of the proposed venture. This includes scrutinizing the target market's regulatory environment, potential for illicit activities, and the impact on vulnerable populations. By prioritizing a robust ethical framework and seeking independent legal and compliance advice, Kirin Holdings can ensure that its decision is not only financially sound, but also legally defensible and ethically responsible. This aligns with the principles of good corporate governance, which mandate that companies act with integrity and in the best interests of all stakeholders, not just shareholders. Adherence to the Kirin Holdings hiring assessment test's specific regulatory framework, which emphasizes ethical conduct and compliance, is paramount. An incorrect approach would be to solely focus on the projected financial returns, without adequately considering the ethical and regulatory risks. This demonstrates a failure to conduct proper due diligence and a disregard for the potential negative consequences, such as reputational damage, regulatory sanctions, or involvement in activities that contravene ethical business practices. Another incorrect approach would be to proceed based on a superficial understanding of the target market's regulations, assuming compliance without rigorous verification. This exposes Kirin Holdings to significant legal and financial penalties and undermines its commitment to responsible operations. A third incorrect approach would be to prioritize short-term gains over long-term sustainability and ethical standing, which can lead to a loss of trust from customers, employees, and the wider community. Professionals should employ a decision-making framework that integrates financial analysis with ethical considerations and regulatory compliance. This involves identifying potential risks and benefits, evaluating them against established ethical principles and regulatory requirements, consulting with relevant internal and external experts, and documenting the decision-making process thoroughly. The framework should encourage a proactive approach to risk management and a commitment to transparency and accountability. Question 5. The monitoring system demonstrates that a senior relationship manager at Kirin Holdings has engaged in a high volume of informal text message communications with several key clients outside of the firm's approved communication channels. These messages appear to discuss market sentiment and potential investment strategies, but are not being logged in the firm's official record-keeping system. Considering the regulatory framework governing financial services firms, which of the following actions should Kirin Holdings Compliance Department prioritize? Option A. Focus solely on the volume of messages, issuing a warning to the relationship manager about excessive communication, irrespective of the content or logging status. Option B. Immediately investigate the content and context of these unlogged communications to determine if they violate any record-keeping, client communication, or market abuse regulations, and review internal policies for clarity and enforcement. Option C. Assume the informal communications are for relationship-building purposes and pose no regulatory risk, and therefore take no immediate action. Option D. Advise the relationship manager to cease all informal communications and strictly adhere to approved channels moving forward, without further investigation into past communications. The correct answer is B. Immediately investigate the content and context of these unlogged communications to determine if they violate any record-keeping, client communication, or market abuse regulations, and review internal policies for clarity and enforcement. Explanation. This scenario presents a professional challenge due to the potential for misinterpreting or misapplying regulatory requirements concerning client communication and record-keeping. Kirin Holdings, like any regulated financial institution, must adhere to strict guidelines to ensure transparency, prevent market abuse, and protect client interests. The difficulty lies in discerning whether the observed communication patterns constitute a breach of these regulations, particularly regarding the timely and accurate recording of client interactions and the potential for information leakage. Careful judgment is required to avoid both overregulation and underregulation, ensuring compliance without stifling legitimate business activities. The correct approach involves a thorough review of Kirin Holdings' internal policies and procedures against the relevant regulatory framework. This includes verifying that all client communications are logged in accordance with the specified retention periods and that any sensitive information shared is handled appropriately. The regulatory framework likely mandates clear protocols for recording client interactions, including the content, date, and participants. Adherence to these protocols is crucial for audit trails, dispute resolution, and demonstrating compliance to regulators. Ethical considerations also play a significant role, emphasizing the duty to act in the client's best interest and maintain confidentiality. An incorrect approach would be to dismiss the monitoring system's findings without further investigation, assuming that the communications are benign. This fails to acknowledge the regulatory obligation to proactively identify and address potential compliance breaches. Another incorrect approach would be to immediately implement punitive measures without a proper investigation, which could lead to unfair disciplinary actions and damage employee morale. Furthermore, an incorrect approach would be to focus solely on the volume of communication rather than its content and context, potentially overlooking serious compliance issues or penalizing legitimate client engagement. Professionals should employ a structured decision-making process that begins with understanding the specific regulatory requirements applicable to Kirin Holdings. This involves consulting the relevant compliance manuals and regulatory guidance. Upon identifying a potential issue, the next step is to gather all relevant facts through a fair and objective investigation, which may involve reviewing communication logs, interviewing involved parties, and examining internal policies. Based on the evidence, a determination should be made regarding compliance. If a breach is identified, appropriate remedial actions, which could range from additional training to disciplinary measures, should be implemented in line with company policy and regulatory expectations. Continuous monitoring and periodic reviews are essential to ensure ongoing compliance. Question 6. System analysis indicates that Kirin Holdings is exploring opportunities to streamline its internal reporting procedures to enhance efficiency and reduce operational costs. Which of the following approaches best balances the pursuit of process optimization with the imperative of regulatory compliance and ethical conduct? Option A. Reducing the frequency of internal audits and compliance checks on reporting processes to free up resources for other operational initiatives. Option B. Implementing automated data aggregation and reporting tools that significantly reduce manual input, provided that the underlying data integrity checks are robust and the final reports are subject to independent verification by the compliance department before dissemination. Option C. Consolidating all financial data into a single, less secure cloud-based platform to simplify access for all employees, without specific data access controls or encryption beyond standard IT security. Option D. Expediting the reporting cycle by bypassing certain internal review stages, with the assumption that the data is inherently accurate due to the reputation of the originating departments. The correct answer is B. Implementing automated data aggregation and reporting tools that significantly reduce manual input, provided that the underlying data integrity checks are robust and the final reports are subject to independent verification by the compliance department before dissemination. Explanation. This scenario presents a professional challenge because Kirin Holdings, as a publicly listed entity, must adhere to stringent regulatory frameworks governing its operations and reporting. Process optimization, while beneficial for efficiency and profitability, must be implemented in a manner that upholds compliance with these regulations. The core challenge lies in balancing the pursuit of operational improvements with the absolute requirement to maintain integrity and transparency in all business dealings, especially concerning financial reporting and stakeholder communications. Careful judgment is required to ensure that any optimization efforts do not inadvertently lead to breaches of regulatory requirements or ethical standards. The correct approach involves a comprehensive review of existing processes to identify inefficiencies and potential improvements, followed by the development and implementation of optimized processes that are demonstrably compliant with all applicable regulations. This includes ensuring that any changes to reporting mechanisms or data handling procedures do not compromise the accuracy or timeliness of financial disclosures, nor violate data privacy laws. The justification for this approach is rooted in the fundamental principles of corporate governance and regulatory compliance. For instance, under the Companies Act and relevant financial reporting standards, Kirin Holdings has a legal and ethical obligation to maintain accurate books and records, and to present a true and fair view of its financial position. Any process optimization that compromises this obligation would be a direct violation. Furthermore, adherence to principles of good corporate citizenship and ethical business conduct, often reinforced by industry-specific guidelines and the company's own code of conduct, mandates that efficiency gains should never come at the expense of integrity. An incorrect approach that focuses solely on cost reduction without considering regulatory implications would be professionally unacceptable. For example, implementing a new accounting software that automates certain entries without adequate oversight or validation could lead to material misstatements in financial reports, violating accounting standards and potentially securities regulations. Another incorrect approach might involve streamlining customer data management processes in a way that bypasses necessary consent mechanisms or data protection protocols, leading to breaches of data privacy laws. This would not only incur legal penalties, but also damage Kirin Holdings' reputation and erode stakeholder trust. A third incorrect approach could be to accelerate product development cycles by cutting corners on quality control or safety testing. While seemingly an optimization for speed to market, this could lead to product defects or safety issues, resulting in regulatory action, product recalls, and significant financial and reputational damage. Violating consumer protection laws and industry safety standards, professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical considerations as non-negotiable prerequisites for any process optimization initiative. This involves a thorough risk assessment at the outset, identifying potential regulatory pitfalls and ethical dilemmas associated with proposed changes. A multidisciplinary team, including legal, compliance, and operational experts, should be involved in the review and approval process. Continuous monitoring and auditing of optimized processes are also crucial to ensure ongoing adherence to regulatory requirements and ethical standards. Question 7. Operational review demonstrates that certain manual data reconciliation processes within Kirin Holdings' financial reporting department are time-consuming and resource-intensive. Management is considering implementing an automated system to streamline these reconciliations, aiming for significant cost savings and faster reporting cycles. However, there is a concern that the proposed automation might alter the audit trail or introduce new data validation challenges that could impact the accuracy of financial statements. Which of the following approaches best balances the objective of process optimization with the absolute priority of regulatory compliance for Kirin Holdings? Option A. Delegate the decision-making for the automation project to the IT department, trusting their expertise to implement a system that is both efficient and compliant without further oversight. Option B. Prioritize the implementation of the automated system based on the projected cost savings, assuming that any minor deviations from current audit trail practices will be acceptable to regulators. Option C. Conduct a comprehensive impact assessment of the proposed automation on Kirin Holdings' existing regulatory reporting obligations and internal controls, involving legal and compliance teams, before any implementation. Option D. Implement the automated system immediately to achieve cost savings and faster reporting, with a plan to address any compliance issues that arise post-implementation. The correct answer is D. Implement the automated system immediately to achieve cost savings and faster reporting, with a plan to address any compliance issues that arise post-implementation. Explanation. This scenario presents a professional challenge because Kirin Holdings, as a publicly listed entity, must adhere to stringent regulatory requirements concerning financial reporting and disclosure. The pressure to optimize processes, while generally positive, must be balanced against the absolute priority of maintaining compliance and the integrity of financial information. Misinterpreting or prioritizing cost savings over regulatory adherence can lead to significant legal, financial, and reputational damage. Careful judgment is required to ensure that any process optimization does not inadvertently compromise compliance obligations. The correct approach involves a thorough assessment of the impact of proposed process changes on Kirin Holdings' compliance with relevant financial regulations and reporting standards. This includes understanding how changes to data collection, aggregation, or reporting mechanisms might affect the accuracy, completeness, and timeliness of financial statements and disclosures. Specifically, it requires consulting with legal and compliance departments to ensure all optimizations are vetted against the Kirin Holdings regulatory framework, which would likely include adherence to accounting standards and any specific listing rules applicable to its stock exchange. This proactive and compliance-first strategy safeguards the company from regulatory breaches and maintains investor confidence. An incorrect approach that focuses solely on immediate cost reduction without considering regulatory implications is professionally unacceptable. This could lead to the implementation of processes that, while cheaper, generate inaccurate or incomplete financial data, violating accounting principles and disclosure requirements. Another incorrect approach that prioritizes speed of implementation over thoroughness risks overlooking critical compliance checks, potentially resulting in the submission of misleading financial information. Furthermore, an approach that bypasses internal legal and compliance review departments, even with good intentions for efficiency, demonstrates a failure to uphold corporate governance standards and regulatory obligations, exposing Kirin Holdings to significant risk. Professionals should adopt a decision-making framework that embeds compliance and ethical considerations at the outset of any process optimization initiative. This involves a risk-based assessment, where potential compliance risks are identified and mitigated before changes are implemented. Collaboration with legal, compliance, and internal audit teams is paramount. Any proposed optimization should be evaluated not only for its efficiency gains, but also for its impact on the integrity and reliability of financial reporting and disclosures, ensuring alignment with the specific regulatory framework governing Kirin Holdings. Question 8. Market research demonstrates that Kirin Holdings is on the verge of a significant breakthrough in a new product line, information that is not yet public. A senior executive, having reviewed preliminary internal reports, is considering making a substantial personal investment in a supplier company that is heavily reliant on Kirin Holdings' future business. What is the most appropriate course of action for the senior executive? Option A. Proceed with the personal investment in the supplier company, as it is a strategic business decision based on anticipated future demand. Option B. Discuss the potential breakthrough with trusted industry contacts to gauge market reaction before making any investment decisions. Option C. Immediately report the preliminary findings to the compliance department for review and refrain from any personal trading until cleared. Option D. Hold off on any investment for a few weeks until the information is more widely disseminated in the market. The correct answer is C. Immediately report the preliminary findings to the compliance department for review and refrain from any personal trading until cleared. Explanation. This scenario presents a professional challenge for Kirin Holdings due to the inherent conflict between leveraging market insights for competitive advantage and the ethical and regulatory imperative to avoid insider trading. The pressure to act swiftly on potentially market-moving information, especially when it originates from a sensitive source, requires a high degree of judgment and adherence to strict compliance protocols. Mismanagement of such information can lead to severe legal penalties, reputational damage, and loss of investor confidence. The correct approach involves immediately reporting the information through the designated internal channels for compliance review, without taking any personal trading action, or further disseminating the information outside of authorized personnel. This upholds Kirin Holdings' commitment to fair markets and regulatory compliance. Specifically, it aligns with the principles of market abuse regulations that prohibit the use of inside information for trading. By initiating a formal compliance review, Kirin Holdings ensures that any potential trading decisions are made only after the information is publicly disclosed or deemed not to be inside information, thereby preventing any appearance or reality of insider dealing. This process safeguards the company and its employees from regulatory sanctions and maintains market integrity. An incorrect approach would be to proceed with trading based on the market research findings before a formal compliance assessment. This directly violates insider trading regulations, as it constitutes trading on material non-public information. Another incorrect approach would be to discuss the findings with colleagues not involved in the compliance review or to make investment decisions for personal accounts based on this information. This constitutes prohibited disclosure and potential tipping, which are also serious breaches of market abuse laws. Finally, ignoring the information and taking no action, while seemingly benign, could be problematic if the information is indeed material and non-public, as it might imply a failure to manage potentially sensitive information responsibly, though the primary failure lies in acting upon it. Professionals facing similar situations should adopt a robust decision-making framework that prioritizes compliance and ethical conduct. This framework should include 1. Recognizing potentially sensitive information. 2. Immediately ceasing any personal trading or discussion of the information outside of authorized channels. 3. Following established internal procedures for reporting such information to the compliance department. 4. Awaiting explicit guidance from compliance before taking any further action. This structured approach ensures that all decisions are made within the bounds of regulatory requirements and ethical standards. Question 9. Process analysis reveals that Kirin Holdings is considering several strategic initiatives to accelerate its market expansion. One initiative involves acquiring a smaller competitor in a new geographical region. Another involves launching a novel product line with potentially significant but unproven market demand. And a third involves forming a strategic alliance with a foreign entity that operates under a different regulatory regime. Which of the following approaches best ensures Kirin Holdings compliance with its hiring assessment tests, specified regulatory framework, and ethical obligations during these expansion efforts? Option A. Prioritize the speed of integration and market entry for the acquisition, focusing on operational synergies and deferring detailed regulatory review of the acquired entity's historical practices until after the transaction is complete. Option B. Focus primarily on the financial projections and potential return on investment for each initiative, with regulatory compliance being a secondary consideration to be addressed only if explicitly flagged by external auditors. Option C. Conduct comprehensive due diligence on all strategic initiatives, including a thorough review of the target company's regulatory compliance, the scientific and market validation for the new product, and the legal and ethical implications of the foreign alliance, ensuring all actions align with the specified regulatory framework and ethical standards before proceeding. Option D. Proceed with the launch of the new product line based on initial positive market research, assuming that any regulatory concerns can be addressed reactively once the product gains traction and generates revenue. The correct answer is A. Prioritize the speed of integration and market entry for the acquisition, focusing on operational synergies and deferring detailed regulatory review of the acquired entity's historical practices until after the transaction is complete. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the stringent regulatory requirements designed to protect investors and market integrity. Kirin Holdings, like any publicly listed entity, must navigate this tension by ensuring that all expansion strategies are compliant with the relevant regulatory framework. The challenge lies in identifying and implementing strategies that are both commercially viable and legally sound, avoiding any actions that could be construed as misleading or manipulative. The correct approach involves a thorough and proactive assessment of all potential expansion avenues against the specific regulatory guidelines applicable to Kirin Holdings. This means not just understanding the letter of the law, but also its spirit, ensuring that any proposed action aligns with the overarching objectives of investor protection and fair market practices. Specifically, this would involve consulting with legal and compliance departments, conducting detailed due diligence on any target entities or new markets, and ensuring all disclosures are accurate and timely. This approach is ethically sound and regulatorily compliant because it prioritizes transparency, fairness, and adherence to established rules, thereby safeguarding Kirin Holdings from legal repercussions and reputational damage. An incorrect approach would be to prioritize speed of execution over regulatory scrutiny. For instance, proceeding with a significant acquisition without adequate due diligence on the target's compliance history or financial standing could lead to unforeseen liabilities and regulatory breaches. Another incorrect approach would be to engage in aggressive marketing or public relations campaigns that exaggerate the benefits of a new venture or product without substantiating claims, which could be deemed misleading under advertising and disclosure regulations. A third incorrect approach would be to bypass internal compliance checks or seek to interpret regulations in the most favorable, rather than the most accurate light. These actions are professionally unacceptable as they demonstrate a disregard for legal obligations and ethical responsibilities, potentially exposing Kirin Holdings to fines, sanctions, and loss of investor confidence. Professionals should adopt a decision-making framework that begins with a clear understanding of the regulatory landscape. This involves identifying all applicable laws, rules, and guidelines. Next, they should assess potential actions against these requirements, seeking expert advice from legal and compliance teams. A critical step is to evaluate the ethical implications of each option, considering the impact on stakeholders, particularly investors. Finally, decisions should be documented thoroughly, demonstrating a clear rationale based on compliance and ethical considerations. Question 10. The efficiency study reveals potential discrepancies in the accounting treatment of certain intercompany transactions within Kirin Holdings. What is the most appropriate initial step for the company's compliance and finance departments to take? Option A. Instruct the relevant departments to adjust the accounting records to align with the study's findings without further investigation. Option B. Wait for the external auditors to identify the discrepancies during their next audit cycle before taking any action. Option C. Immediately disclose the potential discrepancies to the stock exchange and relevant regulatory bodies. Option D. Conduct a thorough internal investigation to determine the nature, extent, and materiality of the discrepancies, consulting with legal counsel and the audit committee. The correct answer is C. Immediately disclose the potential discrepancies to the stock exchange and relevant regulatory bodies. Explanation. This scenario presents a professional challenge because Kirin Holdings, as a publicly listed entity, must adhere to stringent regulatory frameworks governing financial reporting and disclosure. The efficiency study's findings, if material, could significantly impact the company's financial health and investor perception. The core challenge lies in determining the appropriate course of action when potential misstatements are identified, balancing the need for timely and accurate disclosure with the operational realities of investigation and remediation. Careful judgment is required to avoid both premature disclosure that could cause undue market disruption and delayed disclosure that could violate regulatory obligations. The correct approach involves a systematic and compliant process. This begins with a thorough internal investigation to ascertain the nature, extent, and materiality of the identified issues. Once materiality is established, Kirin Holdings must consult with its audit committee and legal counsel to determine the appropriate disclosure strategy in accordance with the relevant regulatory framework. This typically involves preparing and filing necessary amendments or disclosures with the relevant regulatory bodies within prescribed timelines. This approach is correct because it prioritizes regulatory compliance, transparency with stakeholders, and the integrity of financial reporting, which are fundamental ethical and legal obligations for listed companies. Adherence to these principles safeguards investor confidence and market integrity. An incorrect approach would be to ignore or downplay the findings of the efficiency study without a proper assessment of their materiality. This failure to investigate and assess potential misstatements directly contravenes regulatory requirements for accurate financial reporting and could lead to violations of securities laws. Another incorrect approach would be to disclose the findings prematurely or without adequate substantiation. This could lead to market speculation, damage Kirin Holdings' reputation, and potentially result in regulatory scrutiny for unsubstantiated or misleading disclosures. A further incorrect approach would be to delay disclosure beyond regulatory mandated periods after materiality has been established. This constitutes a failure to provide timely and accurate information to investors, a breach of trust, and a violation of disclosure obligations. Professionals should employ a decision-making framework that begins with understanding the specific regulatory obligations applicable to Kirin Holdings. This involves consulting relevant legislation, listing rules, and guidance from regulatory authorities. The framework should then incorporate a robust internal control system for identifying and assessing potential issues. When issues arise, the process should involve a structured investigation, consultation with internal and external experts, legal, audit, and a clear escalation path to senior management and the board. The ultimate decision on disclosure should be guided by materiality, regulatory timelines, and the overarching principle of providing fair and accurate information to the market. Question 11. Market research demonstrates that a significant shift in consumer preference is occurring within a key sector relevant to Kirin Holdings' future product development. The research report, obtained from an independent third-party analytics firm, highlights specific emerging trends and potential market gaps. However, the report's methodology section is somewhat vague regarding the precise sources of its data, mentioning proprietary data aggregation and expert interviews. Kirin Holdings Investment Committee is eager to leverage these insights to inform a strategic acquisition. What is the most appropriate course of action for Kirin Holdings Compliance Officer? Option A. Recommend that Kirin Holdings Investment Committee postpone any decisions regarding the acquisition until the independent third-party analytics firm can provide a detailed breakdown of their data sources and methodology, confirming the public availability of all information used. Option B. Immediately advise the investment committee to proceed with the acquisition based on the research, as it was obtained from an independent firm and appears to indicate a valuable market opportunity. Option C. Advise the investment committee to disregard the research entirely, as the vagueness in its methodology raises potential concerns about the use of non-public information. Option D. Suggest that Kirin Holdings Investment Committee proceed with the acquisition, but instruct the internal legal team to conduct a post-acquisition review of the research's compliance. The correct answer is B. Immediately advise the investment committee to proceed with the acquisition based on the research, as it was obtained from an independent firm and appears to indicate a valuable market opportunity. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire to leverage market insights for competitive advantage and the stringent regulatory requirements governing the use of non-public information. Kirin Holdings, like any regulated entity, must navigate this landscape with utmost care to avoid insider trading or market manipulation. The core difficulty lies in distinguishing between legitimate market research, which is permissible, and the misuse of information that could be construed as non-public and material. Careful judgment is required to ensure all actions align with the spirit and letter of the law, maintaining market integrity and investor confidence. The correct approach involves a rigorous internal review process to ascertain the nature and source of the market research data. This process must confirm that the information is publicly available or has been lawfully obtained through channels that do not confer preferential access to non-public material information. Specifically, it requires verifying that the research does not rely on any confidential discussions with Kirin Holdings management, employees, or other insiders, nor on information obtained through a breach of confidentiality. Adherence to the regulatory framework, which prohibits trading on material non-public information, is paramount. This approach upholds ethical standards by ensuring fair play and preventing any unfair advantage derived from privileged information. An incorrect approach would be to immediately act upon the market research findings without due diligence. This could involve making significant trading decisions for Kirin Holdings or advising clients to do so, based on the assumption that the research is entirely legitimate. The regulatory failure here is the failure to conduct a proper assessment of the information status. If the research, despite initial appearances, contains or is derived from material non-public information, acting upon it would constitute a breach of insider trading regulations. Ethically, this approach demonstrates a disregard for market fairness and could lead to reputational damage for Kirin Holdings and its employees. Another incorrect approach would be to dismiss the market research entirely without any investigation, perhaps due to an overly cautious interpretation of regulations. While avoiding potential breaches is important, outright dismissal without understanding the nature of the research could mean missing legitimate market opportunities that are based on publicly available data or sound analysis of public trends. This is not a direct regulatory violation, but represents a failure in professional diligence and strategic decision-making, potentially hindering Kirin Holdings' ability to compete effectively. A third incorrect approach would be to seek clarification from Kirin Holdings' internal legal or compliance department only after the market research has been used to inform a decision. This is problematic because it suggests a reactive rather than proactive stance. The regulatory framework emphasizes prevention, seeking guidance before acting on potentially sensitive information is crucial. Waiting until after a decision has been made, especially if that decision involves trading or strategic shifts, could mean that any subsequent compliance review is seen as an attempt to retroactively justify a potentially illegal action. The professional decision-making process for similar situations should involve a clear, multi-step protocol. First, always question the source and nature of any market research, especially if it appears to offer unique or highly specific insights. Second, establish a robust internal process for vetting such research, involving compliance and legal teams early on. Third, prioritize obtaining confirmation that the information is indeed public or lawfully obtained before any decisions are made or actions are taken. Fourth, maintain thorough documentation of the vetting process and the basis for any decisions. This proactive and documented approach ensures compliance and fosters a culture of integrity. Question 12. Upon reviewing a prospective client's portfolio and stated investment goals for Kirin Holdings, the client expresses a strong desire to invest a significant portion of their capital into a highly speculative, illiquid asset class that carries substantial risk of capital loss. The client explicitly states they understand the risks and wish to proceed. As a Kirin Holdings advisor, what is the most appropriate course of action? Option A. Politely decline to discuss investments in that asset class, citing internal Kirin Holdings policy without further explanation, and suggest the client seek advice elsewhere. Option B. Conduct a comprehensive suitability assessment to determine if the investment aligns with the client's overall financial situation, risk tolerance, and objectives, and if so, proceed with the investment, providing clear disclosures. If not suitable, explain the concerns and propose alternative suitable investments. Option C. Execute the investment as requested by the client, as their explicit instruction overrides any concerns about suitability, given they have acknowledged the risks. Option D. Recommend a different investment that offers higher commission for Kirin Holdings, explaining that while it carries some risk, it is a more prudent choice for the firm's profitability. The correct answer is B. Conduct a comprehensive suitability assessment to determine if the investment aligns with the client's overall financial situation, risk tolerance, and objectives, and if so, proceed with the investment, providing clear disclosures. If not suitable, explain the concerns and propose alternative suitable investments. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's immediate desire for a specific investment outcome and the advisor's fiduciary duty to act in the client's best interest, considering all relevant risks and regulatory requirements. Kirin Holdings, as a regulated entity, must navigate this by prioritizing compliance and client welfare over potentially lucrative but unsuitable recommendations. The challenge lies in discerning when a client's request, while seemingly straightforward, might lead to an outcome that is not aligned with their risk tolerance, financial objectives, or regulatory guidelines. The correct approach involves a thorough assessment of the client's financial situation, investment objectives, and risk tolerance, followed by a recommendation that is demonstrably suitable and compliant with all applicable regulations. This aligns with the core principles of client-centric advice and regulatory adherence. Specifically, under the Kirin Holdings hiring assessment tests implied regulatory framework, assumed to be aligned with common financial services regulations requiring suitability and best interest duties. Recommending an investment that is not suitable, even if requested by the client, would constitute a breach of fiduciary duty and regulatory noncompliance. The advisor must educate the client on the risks and suitability of their request, offering alternatives if the original request is inappropriate. Recommending the investment solely based on the client's explicit instruction, without a comprehensive suitability assessment, is an incorrect approach. This fails to uphold the advisor's duty to act in the client's best interest and could lead to significant client losses, reputational damage for Kirin Holdings, and regulatory sanctions. Another incorrect approach would be to dismiss the client's request outright without providing a reasoned explanation or offering suitable alternatives. This demonstrates poor client relationship management and a failure to engage constructively with the client's stated preferences, even if those preferences need to be guided. Finally, pressuring the client to accept a different, more profitable investment for the firm, rather than what is truly best for them, is a clear ethical and regulatory violation, prioritizing firm profit over client welfare. Professionals should employ a decision-making framework that begins with understanding the client's needs and objectives. This is followed by a rigorous analysis of potential investment options against these needs, considering all associated risks and regulatory implications. Transparency and clear communication with the client are paramount, ensuring they understand the rationale behind any recommendation and the potential consequences of their investment choices. When a client's request is potentially unsuitable, the professional's role is to educate, guide, and offer compliant alternatives, rather than simply acquiescing or dismissing the request. Question 13. Strategic planning requires Kirin Holdings to consider its upcoming financial performance targets. The head of sales, under pressure to meet ambitious growth figures, suggests a strategy that involves offering significant, undisclosed rebates to major clients in the final quarter. These rebates would artificially inflate reported sales figures for the period, making the company appear to have met its targets, but would negatively impact profitability in the subsequent quarter and could be seen as a form of market manipulation if not properly disclosed. What is the most appropriate course of action for the Kirin Holdings executive team? Option A. Implement the sales strategy with undisclosed rebates to meet the targets and present a strong financial performance to the market. Option B. Seek to renegotiate the financial targets with the board to align them with more achievable organic growth projections. Option C. Reject the sales strategy involving undisclosed rebates and instead focus on organic growth initiatives, even if it means missing the short-term financial targets. Option D. Proceed with the sales strategy, but ensure full disclosure of the rebate structure and its impact on future profitability to relevant stakeholders. The correct answer is A. Implement the sales strategy with undisclosed rebates to meet the targets and present a strong financial performance to the market. Explanation. This scenario presents a professional challenge because it requires balancing Kirin Holdings' strategic growth objectives with the ethical imperative to maintain market integrity and avoid misleading investors. The pressure to achieve ambitious targets can create a temptation to engage in practices that, while potentially offering short-term gains, could violate regulatory principles and damage the company's long-term reputation and legal standing. Careful judgment is required to navigate these competing interests. The correct approach involves transparent communication and realistic forecasting, even if it means acknowledging potential shortfalls. This aligns with the principles of fair dealing and accurate disclosure expected of publicly listed companies. Specifically, it adheres to the spirit of regulations that mandate truthful and not misleading statements to the market, ensuring investors can make informed decisions based on reliable information. This approach prioritizes long-term trust and compliance over immediate, potentially unsustainable performance metrics. An incorrect approach that prioritizes aggressive, potentially unrealistic sales targets without adequate consideration for market realities or regulatory disclosure obligations would fail to uphold the duty of care owed to investors. This could lead to misrepresentation of the company's financial health and future prospects, violating principles of market abuse and investor protection. Another incorrect approach that involves downplaying or omitting significant risks to achieve a positive outlook would similarly breach disclosure requirements, creating an environment where investors are not fully informed. This undermines the fairness and efficiency of the market. Professionals should employ a decision-making framework that begins with identifying the core ethical and regulatory obligations. This involves considering the potential impact of any decision on stakeholders, particularly investors. A robust framework would then involve seeking advice from legal and compliance departments, evaluating alternative strategies that are both commercially viable and ethically sound, and prioritizing transparency and accuracy in all communications. The ultimate goal is to ensure that strategic decisions are not only profitable, but also compliant and sustainable. Question 14. Quality control measures reveal that a representative at Kirin Holdings has recommended a complex structured product to a client with a moderate risk tolerance and limited investment experience. The representative's notes indicate a focus on the product's potential for higher returns, but lack a detailed assessment of how this specific product aligns with the client's stated objectives and overall financial situation. And the disclosure document provided was a standard template. Which of the following represents the most appropriate course of action for Kirin Holdings to address this situation? Option A. Advise the client that the product is standard for their profile and that the disclosure document is sufficient, while encouraging them to seek independent financial advice if they have concerns. Option B. Conduct a thorough review of the client's file to determine if the product recommendation was genuinely suitable, ensuring all regulatory disclosure requirements were met and documented, and if not, take appropriate remedial action with the client and the representative. Option C. Immediately terminate the representative's employment for failing to adhere to Kirin Holdings sales targets and client suitability guidelines. Option D. Issue a warning to the representative about the importance of commission-generating products and instruct them to ensure future recommendations are aligned with client interests, while considering the current recommendation as a learning experience. The correct answer is B. Conduct a thorough review of the client's file to determine if the product recommendation was genuinely suitable, ensuring all regulatory disclosure requirements were met and documented, and if not, take appropriate remedial action with the client and the representative. Explanation. This scenario presents a professional challenge due to the potential for misinterpreting or misapplying regulatory requirements concerning client suitability and disclosure when dealing with complex financial products. Kirin Holdings, as a regulated entity, must ensure its representatives adhere strictly to the established framework to protect clients and maintain market integrity. The core of the challenge lies in balancing the need to offer potentially beneficial products with the absolute requirement to ensure those products are suitable for the client's specific circumstances, and that all associated risks are clearly communicated. The correct approach involves a thorough, documented assessment of the client's financial situation, investment objectives, and risk tolerance before recommending any product, and then ensuring all relevant disclosures are made in a clear and understandable manner. This aligns with the fundamental principles of client protection embedded in financial regulations, which mandate that advice and product offerings must be in the client's best interest. Specifically, it reflects the regulatory obligation to conduct a comprehensive suitability assessment and provide adequate pre-contractual information, preventing clients from entering into investments they do not understand or cannot afford. An incorrect approach that focuses solely on the potential for higher commission for Kirin Holdings would be a severe ethical and regulatory failure. This prioritizes the firm's financial gain over the client's well-being, directly contravening the duty of care and the principle of acting in the client's best interest. Such an approach could lead to significant client losses and subsequent regulatory sanctions. Another incorrect approach, which involves providing a generic product disclosure document without tailoring it to the specific client's understanding or the product's complexity, also fails to meet regulatory standards. While disclosure is required, it must be effective. A document that is not understood by the client, or that fails to highlight the unique risks of a complex product in the context of that client's profile, is not adequate disclosure. This can lead to a situation where the client is unaware of the true nature of the investment, creating a basis for future disputes and regulatory action. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the client's profile thoroughly. This includes their financial capacity, investment knowledge, experience, and stated objectives. 2. Assess product suitability. Evaluate whether the specific product aligns with the client's profile and risk appetite. 3. Ensure comprehensive and understandable disclosure. Provide all necessary information about the product's features, risks, costs, and potential outcomes in a manner the client can comprehend. 4. Document all assessments and communications. Maintain clear records of suitability assessments, client discussions, and disclosures provided. 5. Seek clarification or escalate if unsure. If there is any doubt about suitability or disclosure, consult with senior colleagues or compliance departments. Question 15. Examination of the data shows that a client of Kirin Holdings, a long-standing and high-value customer, has recently engaged in a series of transactions that, while not explicitly illegal on their face, appear to be structured in a way that could be intended to circumvent reporting thresholds for suspicious activities. As an employee of Kirin Holdings, you have identified these patterns. What is the most appropriate course of action for you to take in this situation? Option A. Directly approach the client to inquire about the nature and purpose of these transactions, explaining your concerns about potential regulatory implications. Option B. Discuss your observations and suspicions with a trusted colleague in another department to get their opinion on the matter before taking any action. Option C. Immediately report your suspicions and the observed transaction patterns to Kirin Holdings' designated compliance officer or department, providing all relevant documentation and observations. Option D. Continue to monitor the client's transactions, but take no immediate action, assuming the client is acting within their rights and avoiding potential disruption to the business relationship. The correct answer is C. Immediately report your suspicions and the observed transaction patterns to Kirin Holdings' designated compliance officer or department, providing all relevant documentation and observations. Explanation: this scenario presents a professional challenge for Kirin Holdings employees due to the inherent conflict between client confidentiality and the need to report potential regulatory breaches. Navigating this requires a deep understanding of the relevant regulatory framework, specifically the principles governing client interactions and reporting obligations within the financial services industry, as defined by the Kirin Holdings hiring assessment tests specified jurisdiction. The core of the challenge lies in balancing the duty of care to the client with the paramount responsibility to uphold market integrity and comply with the law. The correct approach involves a structured and compliant process that prioritizes regulatory reporting while respecting client confidentiality as much as possible within legal bounds. This approach is right because it directly addresses the potential breach by escalating it through the appropriate internal channels, thereby initiating a formal investigation. This aligns with the regulatory expectation that firms have robust systems for identifying and reporting suspicious activities. Specifically, it adheres to the principle of see something, say something within a regulated environment, ensuring that potential misconduct is not overlooked and that the firm fulfills its supervisory duties. The regulatory framework mandates that employees report suspected breaches, and this approach ensures that this obligation is met without making unsubstantiated accusations or violating client privacy unnecessarily. An incorrect approach that involves directly confronting the client with suspicions without prior internal consultation or authorization is professionally unacceptable. This action risks prejudicing any potential investigation, could lead to the destruction of evidence, and may expose Kirin Holdings to legal repercussions for mishandling sensitive information or making unfounded allegations. Bypasses the established internal compliance procedures designed to ensure thorough and objective assessment of such matters. Another incorrect approach, which is to ignore the suspicious activity due to a desire to maintain a good client relationship or avoid conflict, represents a significant ethical and regulatory failure. This inaction directly contravenes the duty to report and could be interpreted as complicity or negligence, exposing both the individual and Kirin Holdings to severe penalties. It undermines the integrity of the financial markets and the firm's commitment to compliance. A further incorrect approach, such as discussing the suspicions with colleagues outside of the designated compliance or legal departments, breaches client confidentiality and internal reporting protocols. This gossip or unauthorized disclosure can create a hostile work environment, damage reputation, and compromise the integrity of any subsequent investigation. The professional decision-making process for similar situations should involve a clear understanding of the firm's internal policies and procedures for reporting suspicious activities. This typically includes 1. Documenting observations objectively. 2. Consulting the firm's compliance manual or relevant regulatory guidelines. 3. Reporting the concerns through the designated internal channels, e.g., compliance officer, legal department, without delay. 4. Cooperating fully with any internal investigation. 5. Avoiding any direct confrontation or disclosure to the client or unauthorized third parties until instructed by the compliance or legal team. This systematic approach ensures that all actions are taken within the bounds of the law and ethical conduct, protecting both the individual and the firm. Question 16. Assessment of the proposed market entry strategy for Kirin Holdings into a new Asian jurisdiction, considering the potential impact of evolving local data privacy regulations on customer data handling. Which approach best balances the strategic imperative for expansion with the need for robust risk management and regulatory compliance? Option A. Focus the risk assessment solely on the competitive landscape and potential revenue generation, considering data privacy as a secondary operational concern to be addressed post-entry. Option B. Conduct a high-level review of publicly available summaries of the new data privacy regulations and proceed with market entry, assuming standard compliance measures will suffice. Option C. Prioritize immediate market entry to gain first-mover advantage, deferring a detailed assessment of data privacy regulations until after operations have commenced. Option D. Engage a specialized legal and compliance firm to perform a detailed due diligence assessment of the new data privacy regulations. Identify specific compliance requirements for Kirin Holdings' intended operations, and develop a tailored compliance plan before market entry. The correct answer is B. Conduct a high-level review of publicly available summaries of the new data privacy regulations and proceed with market entry, assuming standard compliance measures will suffice. Explanation: this scenario presents a professional challenge due to the inherent conflict between a business objective and the need for robust risk assessment. Kirin Holdings' desire to expand into a new market, while a strategic goal, necessitates a thorough understanding of potential risks before commitment. The challenge lies in balancing the urgency of market entry with the diligence required to identify and mitigate significant threats, ensuring that the expansion is sustainable and compliant. Careful judgment is required to avoid making decisions based on incomplete or biased information, which could lead to substantial financial, reputational, or regulatory repercussions. The correct approach involves a comprehensive and objective risk assessment that considers a wide range of potential threats, including market volatility, regulatory changes, competitive landscape, and operational challenges specific to the new jurisdiction. This approach is ethically and regulatorily sound because it aligns with the principles of prudent business conduct and the duty of care expected of management. Specifically, it adheres to the spirit of regulatory frameworks that mandate risk management as a core component of corporate governance, ensuring that decisions are informed and that potential negative impacts are proactively addressed. This systematic evaluation allows Kirin Holdings to make an informed decision about market entry, potentially leading to a phased approach or the implementation of specific risk mitigation strategies. An incorrect approach would be to prioritize speed of market entry over the depth of the risk assessment. For instance, relying solely on readily available, superficial market data without in-depth due diligence would be a significant ethical and regulatory failure. This bypasses the fundamental requirement to understand the operating environment and potential pitfalls, exposing Kirin Holdings to unforeseen risks that could violate compliance obligations or lead to significant financial losses. Another incorrect approach would be to focus exclusively on upside potential and downplay or ignore identified risks. This demonstrates a lack of professional integrity and a disregard for the fiduciary duties owed to stakeholders, potentially leading to decisions that are not in the best long-term interest of the company and its shareholders. Such an approach neglects the proactive risk management expected under responsible corporate governance principles. Professionals should employ a decision-making framework that begins with clearly defining the objectives of the assessment. This should be followed by a systematic process of identifying potential risks, analyzing their likelihood and impact, and evaluating existing controls. Based on this analysis, appropriate mitigation strategies should be developed and implemented. Crucially, this process must be iterative, with continuous monitoring and review of identified risks and the effectiveness of mitigation measures. The framework should also incorporate a mechanism for escalating significant risks to senior management and the board, ensuring accountability and informed strategic decision-making. Question 17. Which approach would be most appropriate for a Kirin Holdings employee who has discovered material non-public information that could significantly affect the company's stock price, and who also holds personal investments that would be directly impacted by this information? Option A. Immediately report the material non-public information to Kirin Holdings' Compliance Department and refrain from any personal trading until the information is publicly disclosed or deemed immaterial. Option B. Continue with existing personal investment plans without taking any action, assuming the information might not be as significant as initially perceived. Option C. Execute personal trades based on the discovered information to capitalize on the anticipated stock price movement before it becomes public. Option D. Discuss the information with trusted friends or family members who might be able to benefit from the anticipated stock price movement. The correct answer is A. Immediately report the material non-public information to Kirin Holdings' Compliance Department and refrain from any personal trading until the information is publicly disclosed or deemed immaterial. Explanation: this scenario presents a professional challenge for an employee at Kirin Holdings due to the potential conflict between personal financial interests and the company's ethical obligations. The employee has discovered information that could significantly impact Kirin Holdings' stock price, and their personal investment strategy is directly tied to this information. Navigating this situation requires a deep understanding of insider trading regulations and the company's code of conduct to avoid both legal repercussions and reputational damage. The correct approach involves immediately disclosing the material non-public information to the appropriate compliance or legal department at Kirin Holdings and refraining from any personal trading until the information is publicly disseminated or deemed immaterial. This aligns with the principles of fair markets and regulatory compliance, specifically the prohibition against trading on material non-public information. By reporting the information, the employee upholds their fiduciary duty to the company and prevents potential market manipulation. This proactive disclosure demonstrates integrity and adherence to the spirit and letter of securities laws, which are designed to protect investors and maintain market confidence. An incorrect approach would be to trade on the information before it becomes public. This action constitutes insider trading, a serious offense under securities regulation, leading to severe penalties including fines, disgorgement of profits, and potential imprisonment. It violates the trust placed in the employee by Kirin Holdings and the broader investment community. Another incorrect approach would be to discuss the information with friends or family who might then trade on it. This constitutes tipping, which is also illegal and carries similar penalties to direct insider trading. It extends the breach of confidentiality and ethical responsibility beyond the individual. Finally, ignoring the information and continuing with personal investment plans without considering the implications of the discovered information is also professionally irresponsible. While not directly trading on it, it shows a disregard for potential conflicts of interest and regulatory obligations, potentially exposing both the individual and Kirin Holdings to risk if the information later surfaces and is linked to the employee's inaction. Professionals facing such dilemmas should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves recognizing potential conflicts of interest, understanding relevant legal and company policies, seeking guidance from internal compliance or legal departments, and acting with transparency and integrity. The default action should always be to err on the side of caution and disclose, rather than to act in a way that could be perceived as self-serving or detrimental to market fairness. Question 18. Implementation of a new, substantial contract for Kirin Holdings is imminent, and the sales team is eager to recognize the revenue immediately to meet ambitious year-end targets. The proposed accounting treatment for this contract involves recognizing revenue upfront, even though significant performance obligations remain outstanding, and the collectibility of the full amount is not yet fully assured. The finance department is seeking guidance on how to proceed in a manner that is both commercially beneficial and compliant with regulatory requirements. Option A. Seek advice solely from external legal counsel regarding the contractual enforceability of the revenue recognition, without involving internal finance or audit teams in the accounting assessment. Option B. Defer revenue recognition until the entire contract is fully completed and all payments have been received, regardless of the extent of performance obligations already met. Option C. Conduct a thorough review of the contract terms and proposed accounting treatment, consulting with Kirin Holdings' internal audit and finance experts to ensure compliance with applicable accounting standards and regulatory guidelines before recognizing any revenue. Option D. Proceed with the proposed revenue recognition treatment as suggested by the sales team, prioritizing the immediate recognition of revenue to meet year-end targets and secure the contract. The correct answer is D. Proceed with the proposed revenue recognition treatment as suggested by the sales team, prioritizing the immediate recognition of revenue to meet year-end targets and secure the contract. Explanation. This scenario presents a professional challenge for Kirin Holdings due to the inherent conflict between the desire to secure a significant new business contract and the obligation to maintain the integrity of financial reporting and comply with relevant regulations. The pressure to meet ambitious revenue targets can lead to temptations to engage in aggressive accounting practices that may misrepresent the true financial health of the company. Careful judgment is required to navigate these pressures while upholding ethical standards and legal requirements. The correct approach involves a thorough and independent review of the proposed accounting treatment by Kirin Holdings' internal audit and finance departments, with a clear focus on adherence to the relevant accounting standards and regulatory guidelines. This approach ensures that any accounting decisions are based on objective assessment and comply with the principles of fair presentation and transparency. Specifically, it aligns with the regulatory framework that mandates accurate financial reporting and prohibits practices that mislead stakeholders. The ethical imperative is to act in the best interests of all stakeholders, which includes providing a true and fair view of the company's financial position, rather than prioritizing short-term gains through potentially misleading accounting. An incorrect approach would be to proceed with the proposed accounting treatment without sufficient scrutiny, driven solely by the desire to secure the contract and meet targets. This would represent a failure to exercise due diligence and could lead to a breach of accounting standards, potentially resulting in misstated financial statements. Such an action would violate the regulatory requirement for accurate financial reporting and could expose Kirin Holdings to significant penalties, reputational damage, and loss of investor confidence. Another incorrect approach would be to consult only external legal counsel for advice on the accounting treatment, without involving the internal finance and audit teams. While legal advice is important, it does not substitute for the technical accounting expertise required to ensure compliance with accounting standards and regulatory pronouncements. This would be an ethical failure to utilize the appropriate internal expertise and could lead to an incomplete or inaccurate assessment of the accounting implications. Professionals should employ a decision-making framework that prioritizes compliance, integrity, and stakeholder interests. This involves 1. Identifying the relevant regulatory and ethical obligations. 2. Gathering all necessary information and seeking expert advice from appropriate internal and external parties. 3. Objectively assessing the implications of different courses of action against these obligations. 4. Documenting the decision-making process and the rationale behind the chosen approach. 5. Escalating any significant concerns or potential breaches to senior management or the audit committee. Question 19. The audit findings indicate potential control weaknesses within Kirin Holdings' revenue recognition processes. Which of the following approaches best reflects a professional and compliant response to assess the impact of these findings? Option A. Instruct the internal audit team to disregard the findings as they are likely minor and do not warrant significant attention, focusing instead on upcoming strategic initiatives for Kirin Holdings. Option B. Conduct a detailed impact assessment by quantifying the potential financial implications of the identified control weaknesses and evaluating their materiality against Kirin Holdings' financial statements, while also considering the operational and reputational risks. Option C. Rely on informal discussions with department heads to gauge the severity of the control weaknesses and make broad assumptions about their impact on Kirin Holdings' reported revenues. Option D. Immediately issue a public statement acknowledging significant financial irregularities and suspend all revenue-generating activities until the control weaknesses are fully remediated. The correct answer is B. Conduct a detailed impact assessment by quantifying the potential financial implications of the identified control weaknesses and evaluating their materiality against Kirin Holdings' financial statements, while also considering the operational and reputational risks. Explanation. This scenario presents a professional challenge because it requires Kirin Holdings to balance the need for timely and accurate financial reporting with the potential for misinterpreting or overstating the impact of audit findings. The challenge lies in assessing the materiality and implications of the findings without causing undue alarm or making premature decisions that could negatively affect stakeholders or the company's reputation. Careful judgment is required to determine the appropriate level of disclosure and the necessary corrective actions. The correct approach involves a thorough, evidence-based assessment of the audit findings' impact on Kirin Holdings' financial statements and operations. This approach is right because it adheres to the principles of accurate financial reporting and good corporate governance. Specifically, it aligns with the regulatory framework that mandates transparency and the accurate representation of a company's financial health. By conducting a detailed impact assessment, Kirin Holdings ensures that any necessary adjustments or disclosures are based on a clear understanding of the facts, minimizing the risk of misstatement or misleading stakeholders. This proactive and analytical stance is crucial for maintaining investor confidence and regulatory compliance. An incorrect approach that focuses solely on immediate, drastic action without a proper assessment would be professionally unacceptable. This would likely involve overreacting to the findings, potentially leading to unnecessary panic among investors or the market, and could result in costly or ineffective remedial measures. Such an approach fails to uphold the principle of materiality, which is central to financial reporting, and could be seen as a failure to exercise due diligence. Another incorrect approach that involves downplaying or ignoring the audit findings would be a severe ethical and regulatory failure. This would directly contravene the duty to report accurately and could lead to material misstatements in financial reports, potentially deceiving investors and regulators. This demonstrates a lack of integrity and a disregard for compliance obligations. A third incorrect approach that relies on anecdotal evidence or speculation rather than a structured impact assessment would also be professionally unsound. This would lead to decisions based on incomplete or unreliable information, increasing the risk of errors and undermining the credibility of Kirin Holdings' financial reporting and management. The professional decision-making process for similar situations should involve a structured approach. First, thoroughly understand the audit findings and their scope. Second, engage relevant internal experts, e.g., finance, legal, compliance, to analyze the potential impact. Third, determine materiality based on established accounting standards and regulatory guidance. Fourth, consult with external auditors and legal counsel as necessary. And finally, develop and implement appropriate actions, including any required disclosures or corrective measures, in a timely and transparent manner. Question 20. During the evaluation of a significant client engagement for Kirin Holdings, the client's management requests that certain disclosures in the financial statements be presented in a manner that, while not explicitly false, omits certain contextual information that the compliance team believes is material for a true and fair view. The compliance team is concerned that this presentation could mislead investors. What is the most appropriate course of action for the Kirin Holdings compliance team? Option A. Engage in detailed discussions with the client to explain the regulatory requirements for full and fair disclosure, advocating for the inclusion of the necessary contextual information, and if agreement cannot be reached, escalate the matter internally to ensure compliance with the Kirin Holdings hiring assessment tests specified regulatory framework. Option B. Inform the client that their request cannot be accommodated and refuse to proceed with the engagement unless the financial statements are presented exactly as the compliance team dictates, without further discussion. Option C. Proceed with the client's requested presentation to maintain a positive client relationship and avoid delays, assuming that the information is not explicitly misleading according to the letter of the law. Option D. Advise the client on how to phrase the disclosures to be technically compliant, but still achieve the desired effect of downplaying the omitted context, thereby satisfying the client's request while appearing to adhere to regulations. The correct answer is A. Engage in detailed discussions with the client to explain the regulatory requirements for full and fair disclosure, advocating for the inclusion of the necessary contextual information, and if agreement cannot be reached, escalate the matter internally to ensure compliance with the Kirin Holdings hiring assessment tests specified regulatory framework. Explanation. This scenario presents a professional challenge for Kirin Holdings compliance team due to the inherent conflict between a client's request and regulatory obligations. The team must navigate the delicate balance of maintaining client relationships while upholding the integrity of financial reporting and adhering to the Kirin Holdings hiring assessment tests specified regulatory framework. The pressure to meet deadlines and satisfy client expectations can create an environment where shortcuts or misinterpretations of regulations might seem appealing, but such actions carry significant ethical and legal repercussions. Careful judgment is required to ensure that all actions are compliant, transparent, and in the best interest of both the firm and the regulatory environment. The correct approach involves a thorough understanding and strict application of the relevant regulatory framework, as defined by the Kirin Holdings hiring assessment test jurisdiction. This means prioritizing accurate and complete disclosure, even if it means challenging the client's preferred presentation. The compliance team must engage in open and honest communication with the client, explaining the regulatory requirements and the rationale behind any necessary adjustments to the financial statements. This approach upholds professional integrity, ensures compliance with the law, and protects Kirin Holdings from potential penalties and reputational damage. It demonstrates a commitment to ethical conduct and robust governance, which are paramount in the financial services industry. An incorrect approach that involves acquiescing to the client's request without proper scrutiny would constitute a serious regulatory failure. This could lead to misstated financial reports, which violates the core principles of financial transparency and accuracy mandated by the regulatory framework. Such an action could expose Kirin Holdings to fines, sanctions, and severe reputational harm. Another incorrect approach, such as attempting to obscure the issue or delay disclosure, would also be a violation. This demonstrates a lack of integrity and a disregard for the regulatory obligation to provide timely and accurate information. It suggests an intent to mislead stakeholders, which is ethically reprehensible and legally actionable. Finally, an approach that focuses solely on the client's immediate satisfaction without considering the broader regulatory implications would be professionally negligent. While client satisfaction is important, it cannot supersede legal and ethical responsibilities. Professionals should adopt a decision-making framework that begins with a clear understanding of the applicable regulatory requirements. This should be followed by an objective assessment of the situation, identifying any potential conflicts or deviations from these requirements. Open communication with all relevant parties, including the client and internal stakeholders, is crucial. If a conflict arises, the professional must clearly articulate the regulatory basis for their stance and propose compliant solutions. Escalation to senior management or legal counsel should be considered if the situation remains unresolved or carries significant risk. The ultimate goal is to ensure that all actions are defensible from a regulatory and ethical standpoint.